Hey everyone, welcome back to Corporate Decoder, the place where we take those snoozeworthy corporate filings and turn them into something you might actually want to listen to. Today we're diving into the Wilmington Fund's annual report, so get ready to hear about bond yields, expense ratios, and all that money market goodness. Seriously, you won't believe what exciting twists await in a report, this dull troll. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below and a report this dull troll. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. This annual shareholder report contains some interesting insights and some not so interesting data. The Wilmington funds are several different investment funds, and so that means that we can actually analyze together. So let's dive in and take a look. First up, we've got a breakdown of fund expenses. For the Wilmington US Government Money Market Funds Administrative Class, the hypothetical cost of a $10,000 investment was 61 TOS with 60% percentage. In the institutional class of the same fund, costs were 26 UAs, where it have a 6.25%. This is going to be a trend we see of different fees based on the class that you are in. Let's start at the top. The fund net assets for the money market fund were just over $10 billion. A substantial fund. There are 58 portfolio holdings and the total advisory fees paid were over $10 million. You're seeing massive sums, but a lot of these are money markets and bonds. Taking a quick look at what the fund invested in, it was mainly in repurchase agreements at over 48%, US Treasury obligations at over 30%, US government agency obligations at over 20%. Now, you may be wondering at this point what's going on with all of these random codes here. All of this is a tagging, and it helps them categorize the different types of funds and indices. Now, again, just more tables. This shows all the different Bloomberg indexes across multiple dates. This helps classify which fund is under which broader type of financial instruments. Okay, we get it. Lots of technical codes for the filings, essentially like digital fingerprints. The code 0000000830744 is their central company number, also called CIK. Okay, on to the next fund, the Wilmington Broad Market Bond Fund. For the Class A fund, the costs of a $10,000 investment were $73 or 0.7%. Remember that some of these charge percentages and fees versus others, this has more active management. Class A in this particular fund returned 740% if you held Class I shares. Your returns were at 766%. So again, those different classes play an important role towards the returns and how much of your profit is kept by the fund itself. It's interesting that the management mentioned the US Federal Reserve. The Fed just lowered its target Fed funds rate, albeit modestly, as it balanced the potential for a slowing economy against the possibility of lingering inflation. This really highlights the fact that if you're someone holding high yield bonds, things still can change on you, especially at that 6 to 12 month horizon. The portfolio turnover rate as the end of the reporting period was 29%, and this means that the fund does a reasonable amount of trading, and you can see this with the portfolio composition split between a variety of bonds from US Treasury obligations, mortgage-backed securities, etc. Nothing particularly outlandish. The credit quality diversification of the bonds were mostly in AAA to BA, which are the higher quality with lower yield bonds. Okay, lots and lots of detail throughout this report, including an important note on effective rate changes. On August 31, 2024, the fund switched to the Standard & Poor's Municipal Bond Index. Always read the fine print, things change. Alright, next fund under the looking glass, the Wilmington Enhanced Dividend Income Strategy Fund. The reported cost on a $10,000 investment totaled to $78 or 0.75%. But how did it perform? The fund's Class A shares, excluding sales load, returned 7.88%. Stock selection was the biggest positive contributor as well. The market was rough, but good picks helped. They had large allocations to dividend yielding stocks, and this is a very important to note whenever you see dividend funds doing well or not doing well due to their holdings. Another important point is to look at the fund net assets, sitting only about $75 million. The portfolio turnover rate as the end of the reporting period was 16%. This generally means that less trading occurred there as long-term investments. Last stop in this filing, the Wilmington Large Cap Strategy Fund. First of all, let's take a look at hypothetical investment of $10,000 in Class A, assuming a sales load. Growth of $10,000, the annual total returns are listed in this table. The tech sector momentum buoyed US equity markets for most of the period before falling drastically after the Chinese AI startup. As with everything, always make sure that you remember that previous success does not mean continued success. Digging in, let's see how diversified this fund is on a percentage basis. The total advisory fees were relatively small, under $1 million, with a portfolio turnover rate of 7%, which means, again, very, very low trading, a broad number of assets. If we scroll down and look at the top, about 28% approximately is in information technology. Another 15% or so is in financials. Alright, so what's the overall picture of these funds and what do they tell us about strategy? Here's my 2 cents on some of these data points. It's not financial advice though. I am no expert. As always, never copy what YouTube people like me say. Do your own research. So what do we make of all of this data? First major downside, fees are kind of high and eat into returns, so it is important to shop around. That said, returns seem to be a bit above market. One thing to remember, all these money, bonds and income yield heavy strategies are very risky, so do your own due diligence and ask a professional. Alright, now you know exactly what kind of instruments the Wilmington funds offered. What's your take on these reports and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.